Hello, Moon Glasses. We are BC3 Consulting Group, and we are thrilled to be presenting to you today. We know your time is extremely valuable, and we have a lot to cover, so let's get right into it. By the end of this presentation, we hope you have a fundamental understanding of why BC3. We're going to tell you what differentiates us from our competitors and why you should be working with us. We're also going to walk you through each of the 4 financial statements. There's a lot of information in each of these statements, so we can't possibly cover it all. But we will show you what each statement looks like and the fundamental principles of each statement. And lastly, we're going to tie the statements together for you. These statements don't exist in a vacuum, and when done right, they should all flow into one another. So, Melissa, why don't you tell us why BC3?
Why BC3? I have been working with this company for a long time, and the vast majority of the customers, they have expressed great satisfaction with our services. In your industry alone, we have taken over 100 company public and have ensured that they sign a report, like a faithful report to their shareholders. We guarantee you that we will remain compliant with the SEC. And also $21 billion in IPOs have already been created for startups. And we have the CPAs ready to assist you at any time. Thank you, and back to you.
Assets equal liabilities plus shareholders' equity. Let me say that again. Assets equal liabilities plus shareholders' equity. This is the foundation of the balance sheet. We need this equation to hold for you, Moon Glasses, at all times to remain compliant. Let's get into what some of these terms mean. Assets are things that a company owns that have value. This could be the cash that your company has in the bank. It could be your inventory of glasses that you have. It could even be the laptop that I see some of you taking notes on. If it has value, it's an asset. On the other hand, we have liabilities. These are amounts of money that a company owes. For example, this could be the rent you pay for your warehouse, salaries you pay to your workers. If you owe it to someone, it's a liability. And the last piece of that equation is shareholders' equity. We're going to talk about that a little more in the presentation later, so stay tuned. Why don't we take a look at what a real balance sheet looks like. This is Warby Parker, another sunglass manufacturer's balance sheet. On the left-hand side, we have the assets, and on the right-hand side, we have liabilities and shareholders' equity. 2 items I want to point out are total current assets and total current liabilities. These mean that the asset or liability is expected to be liquidated within the year. Everything else on the bottom below the current assets won't be liquidated within the year. The last thing I want to point out, I talked about the equation at the beginning. We see our total assets here at $568 million for Warby Parker are equal to, on the left-hand side, our liabilities plus shareholders' equity. Therefore, we're compliant with the SEC. What the balance sheet doesn't tell you is the profitability of the company. So I'm going to turn it over to Melissa to discuss that in the income statement.
Income statement. What is the income statement? It is the cost of doing business. No business can run without operating expenses. And once you have those operating expenses, and this is what the income statement will show us periodically. We can have an income statement annually or quarterly. Also here, we have highlighted the 3 major elements of the income statement. We have the gross profit. We also have the loss from operation, and at the bottom, we have the comprehensive loss, or it can be net profit. So let's talk about the gross revenue. So technically, what is the gross revenue? The gross revenue is our income before the operating expenses are deducted. Once those operating expenses are deducted, we should have a net profit. And what is the net profit? This is exactly what we want. We want to maximize our net profit and minimize our operating expenses. What will that do to us? It will ensure that we avoid a net loss. Now, we're going to talk out to Martina for the statement of cash flow.
So the statement of cash flows is basically a record of all the cash equivalents entering and exiting a company. It is important because it signals a company's financial health, and it's relevant to two main groups of stakeholders, investors and creditors. So when we look at the statement of cash flows, there are many voices. It can be confusing, but actually it can be divided up into three main categories. So first, the cash flows resulting from operating activities, and second, from investing activities, and finally, financing activities. Now, these categories are kind of self-explanatory. However, I would like to point out a main difference between the statement of cash flows and the income statement. So cash flows resulting from operating activities are basically net loss or net profit. That is also included in the income statement. However, contrary to the income statement, in the statement of cash flows, non-cash items are not included. Therefore, net loss in this case needs to be adjusted for all the non-cash items that are highlighted here. Also, another important thing that you may notice is that in the case of Warby Parker, at the beginning of the year, they had a net loss of $110 million. However, by the end of the year, the balance was positive, and that's because of stock-based compensation, which is also included in the shareholders' equity that Ben will present now.
All right, so let's cover the statement of shareholders' equity. As we heard before, assets are equal to liabilities plus shareholders' equity. So that means equity is a vital component of the financial accounting equation. In this next illustration, we can see from a balance sheet perspective how equity relates to assets and liabilities and the income statement accounts. Here in green, we see revenues and expenses that will boil down to one number, net income or net loss. That income or loss will now then flow into the retained earnings balance here in purple and either increase or decrease that retained earning balance for the year. Now, there are two main reasons why we believe the statement of shareholders' equity is important. One, it demonstrates the growth and change in the value and equity of the company over time. So are investors gaining value in their investment? Are they losing value in their investment? That can be tracked over time. The second reason is because it's useful for investors, analysts, company executives, and other users of financial statements that want to evaluate the health of a company. So I'm sure everyone here is familiar with ratios like return on equity, debt to equity. Those are both great examples of how we can leverage this financial statement. So here in Warby Parker's 2022 Statement of Shareholders' Equity, we see a lot of key figures. Most importantly, we see the beginning and ending balances of shareholders' equity at roughly the same amount, $286 million. As we heard before, Warby Parker experienced a net loss of $110 million, but that was mostly offset by $98 million that came in the form of additional paid-in capital. So in other words, that means some employees decided to receive their compensation in the form of equity as opposed to cash, and that value came into Warby Parker's bank account. Okay, so now that we've covered the four financial statements individually, let's see how they relate to each other collectively. Here in the top left, we see the income statement again. As we heard before, that's going to boil down to one number, net income. That number is then going to flow into the blue, through the blue line here, into the statement of shareholders' equity, and either increase or decrease the retained earnings balance. Then, the ending balance of the statement of shareholders' equity will flow into the balance sheet through that green line and be totaled together with liabilities to create one figure, total liabilities and shareholders' equity. Then, as we can see here through the pink line, underneath the assets section, the cash balance has to agree with the ending balance of the statement of cash flows. So now that we have an in-depth view of how the four financial statements interact with each other, we can then better evaluate the financial health of a company. Our presentation is just about coming to an end, so I just want to pass it off to Martina to wrap us up.
I hope our expertise came through on this presentation. We are the right company for you. We want to help you go public and reach full potential. So thank you very much.